What's up, guys? Eric here, Mr. Fired Up Wealth. Totally impromptu here. I'm rocking the middle-aged Fred Durst look. You got to love it. I'm live right now on Discord. This is the Fired Up Wealth exclusive community Discord. And I got an idea, want to put it on a video, put it on YouTube, think it's going to be good. So here's what we're doing. So if you've been following me at all, I talk about how to invest in spec stocks, and I've got some videos on the channel. I've got some portfolio videos. I've got an older video from, I think, 2019 that talks about how I invest in speculative stocks. But sometimes just having someone explain it isn't as beneficial as seeing it in action. So that's what we're going to do today. We're going to see it in action. I'm going to actually demo you. And what I'm doing here is I'm just taking this information straight from Discord. I went in and said, please name a spec stock that you own below and the price you bought it at. I have an idea for an exercise, ideally ones that have run hard, and I'll show you why in a second. So we're going to go right down the line. So the first one here, and I've got it on my phone as well, but I wanted you to see the screen so you can see. This is in order. I'm not cherry picking at all. I'm going to go right down the line, and we're going to fill out a spreadsheet and pretend like we bought these stocks. And I'm going to show you something really powerful. So this is a demo. So the first one was Space, Virgin Galactic. That was actually a Discord buy at $15. Is when we were buying it last summer in Discord, and I think it was last summer or last fall, 2020. So that's up 100% right now. Psychology bought at $15. Also, Alex C has one for $16.68. I'm just going to go in order though. So the very first post was Psychology, Space, $15. We've got that in there. So Finn has APHA, not AOHA, APHA. And he's got this. He bought this at $2.12. So we're going to put that in there. He's up 732%. Very nice pick. Trade King, INVU. We're going to put in the price. He bought it at 0.42. Okay. And that one is up 69%. It's trading at 71 cents. Then we've got William Steele. I know him and Gustavo both bought this really inexpensively in the $3 range. William Steele. Neo at $3.70. That's a lifetime buy right there. Congratulations, buddy. That's a 10 bagger. It was even higher at one point. What's next? DraftKings. This was a Discord buy under $35. Looks like AND bought this one at $28.50. Okay, so that one is up 121%. Stay tuned. You're going to see what we're getting at here in a second. It's going to be cool. So next one is ATNF, and that one at $5. And then we have A Copy, which that one is not taken off yet, but at $6 for Henry Bull. That's a recovery type play. It's A2 Milk. It's one that I've been buying in Discord. Tony C's got EN. I don't know this one, but ENTEF. It looks like he bought this at 43 cents. And that's not too bad of a buy there, buddy. Looks like it's up 355%. Okay, and we got Pack B, Dorian Gray. That's the last one, okay? So we're going to do Pack B, all right? Pack B, we're going to do that one at $6.32. Very nice buy. We're just going to use those right away. So that's 1, 2, 3, 4, 5, 6, 7, 8, 9 picks. And for anybody that I excluded, Derek in there, Palantir at $9.23. That was a Discord buy. Andreas IPO at $17.01. Alfred NNOX at 27. Those are good picks too. This is enough for the example. So what are we going to do now? We are going to assume that we bought, let's just say we bought, we did something really stupid and we bought, I don't know, Aurora Cannabis. And let's say it's $9 now. Let's say we paid, $100. And this is just hypothetical. So we want to show that we lost like 91% on a stock. Now, if a story changes, you probably would get out of it sooner. You know, one of the rules, one of my top 15 investing rules is if the story changes, basically sell it, cut your losses, and reposition that capital. But we're just going to pretend that basically we had a couple real big dogs in here that basically, you know, went much lower. I'm trying to think of another one to use. You know, we can just put anything in here. Like, let's say we bought, okay, for this last one, I'm going to use NGL, just a stock that was one of the worst performers of last year. And let's just say we bought it at $200 and it's worth $2. These last two are hypothetical. So these first 9 are actual buys from the Discord community. You saw it earlier. These last two are just, let's just say that we had two that basically were dogs. Say they went to 0. Okay, so what we want to do is make sure these were equal weight. So since these share prices, you know, they vary so much, we got to do a little bit of work in here, but it won't take long. I'm going to go ahead and I'm going to change this. Right now it's 100 shares, and you can see the buy value in row G. You can see how the prices are a lot different. So what we're going to do is we're going to make these equal weight in terms of dollar amount when you your cost basis. I'm going to update the spreadsheet. I'll be right back. Okay, so I've updated this spreadsheet. You can see here on row G, the buy value. All of them are at 3,000 or within a couple of cents or $1, but I tried to get them basically at equal weight. $3,000 was the cost basis that you put into the stock. So you'll see the ticker that we went through earlier is B, and then you got number of shares is C. You've got the stock price that you bought it at, the current stock price, the percentage up and down, the buy value, current value, so on. Self-explanatory, right? So if you look at this now, this has two stocks that basically went down 91%, 98%. You have a third stock that literally did nothing, is flat. You've got a stock that's up 44%, one stock that's up 71%, and then some bangers, right? So let's just sort this once. Sort through A to Z. So you can see this goes from worst performance to best. So you've got two that are complete dogs, one that's flat, one that did, you know, pretty well at 44%, and it gets better all the way up to Neo, which is 982%. Now, of course, you can play around with this. You could take out Neo and it would impact, you know, this bucket of stocks immensely. The point I'm trying to show you here is that if you're investing in spec stocks, for me, the strategy behind it is that you want to invest a percentage of your portfolio. Let's just say you have a $100,000 portfolio. You might want to do 10% in spec. That's $10,000, and you might have 10 or 20 stocks in that $10,000 bucket, and you're trying to outperform. So in this case here, you had essentially $33,000. You know, say you had a couple $100,000 portfolio and you wanted to play it this way. That's how I would do it. And you're trying to outperform as a bucket. So you can see that you're going to have winners, you're going to have some losers. You know, Peter Lynch, his goal, and this is a little different than Peter Lynch because this is, you know, this is high growth investing, and Peter Lynch was much more about value investing, but still outperform the market year over year. You know, as a you know, the Magellan Fund manager for the mutual fund for Fidelity. But you think about, you know, it's the same approach as Peter Lynch. Like if I can outperform, he says in the book, if he can outperform 6 out of 10 times, that he's basically going to beat the market, you know, have an enviable position. 7 out of 10 times he's going to be, ecstatic. And I can't remember the exact words in the book. It's from One Up on Wall Street. But the point being is he knew he was going to have a few losers out of his bucket every time. So if you have 10 stocks, you know, if 7 of them are winners, you're doing pretty good. You know, if you get 6, you're still going to beat the market. In this case, you've got, you know, basically 11 stocks, 3 of them that haven't really done very well. One's flat, 2 are negative, you know, and these are huge losses. Imagine if you lost conviction in these other 2 stocks and you sold them at a 20 or 30% loss. This would be even a better number. And of course you can skew it by taking Neo out of the mix and it would be a lower number. But this is a $30,000 investment that's now worth $113,000. And you say, well, if you're only doing 10% of your portfolio, it can't really make a difference. You can see here that it can make a massive difference. Because if you had, you know, say you had a $250,000 portfolio and you decide to put 30,000 of that in spec, that alone took your portfolio from 250,000 to, you know, approaching $400,000, right? You know, even if you just you just market performed with the other baskets in your portfolio. So, you know, this is a massive gain. It ends up being, you know, a 245% overall gain when you do the math on it. And it's a simple way to show you how that spec bucket can be used to help pull up the average percentage, the performance of your overall portfolio to help you beat the market. And that's what it's all about, trying to beat the market, outperform the market, retire early, and enjoy life. So I hope this video was helpful. Please do subscribe, hit the like button, drop a comment. Appreciate you guys watching. Appreciate your time and attention. Have a great rest of your day. Take care.